I believe I had other classes with you before, but today it's the second class with you, I think. And you know the topic of discussion today, have you been given the handout by the education department?
Sir, I'm a PC.
Okay.
PC.
Okay. So have you gone through it? Not really. What is your regular teacher teaching you?
Ranjan sir.
Yes. What is he teaching you?
The last chapter TDS ছিল
কি ছিল TDS?
জি স্যার লাস্ট চ্যাপ্টারটা TDS পড়াইছিল স্যার
Okay. TDS. What do you mean by TDS?
Tax direct at source.
So what is the necessity of it? Why is it needed?
স্যার একটু বাংলায় বলি স্যার।
Yeah, please.
স্যার এটা প্রয়োজন হচ্ছে সরকারের ট্যাক্সটা যেন এনশিওর করা হয়, সেজন্য TDS টাকাটা হয়। এক্ষেত্রে যিনি প্রোডাক্টটা পারচেজ করে বা যিনি সার্ভিসটা নেয় বা পেমেন্টটা প্রদান করে, সেক্ষেত্রে সরকারের ট্যাক্সটা কাটা, এই ট্যাক্সটা কেটে সরকারের ফান্ডে ট্যাক্সটা ওই পাওনাদার পক্ষ থেকে এবং তাকে চালান প্রদান করবে। সরকারের ট্যাক্সটা এনশিওর করার জন্য মূলত TDS-টা কাটা হয়।
Okay, so ensure means you can also realize the taxes after the assessment is made. But why you are collecting the tax in advance? Can you give me the reasons? Why is it collected in advance?
Sir, government pocket to sir, এটা স্যার সহজ হবে এর জন্য।
If I go for
ট্যাক্সটা মূলত সহজে আদায় করার জন্যই ট্যাক্স অ্যাডভান্স ট্যাক্স না হয়, যেন একটা সার্টেন টাইমে যিনি ট্যাক্স পেয়ার তার উপর বার্ডেনটা না হয়। যেমন আমরা ইনকাম ট্যাক্সের ক্ষেত্রে দেখতেছি, কোম্পানি ট্যাক্সের ক্ষেত্রে যে আপনার প্রতি 4 মাস কোয়ার্টারলি অ্যাডভান্স ট্যাক্স দিয়ে দিতে হয়, টার্নওভার ট্যাক্স বা যে তার ইনকাম ট্যাক্সের উপরে। এই জন্যই সম্ভবত TDS-টা অ্যাডভান্স ট্যাক্সটা।
Okay, very good. This is the advance tax and the government can realize it without any hassle. But if you go through assessment, then you have to face some phases. That means you have to go for hearing, you have to submit the documents, then the documents are getting verified by the Deputy Commissioner of Taxes. Then you can also be required to go there twice or thrice. Then the assessment is made, and afterwards you are issued with a challan and a demand note and an assessment order. So if you are satisfied with the assessment order, then you pay the taxes. If you are not satisfied with the assessment order, then you are not paying taxes. You will go for preferring an appeal to the appellate joint commissioner or appellate commissioner of taxes. So that's why it's a lengthy process. So in that case, government will be realizing the revenue after a long time. So the most important thing is that if you realize tax today and if you realize tax after 2 years, what is the difference?
জি স্যার, ডিফারেন্স এটা হচ্ছে এখন নিলে সরকারের যে এক্সপেন্সটা আছে সেগুলো বিয়ার করা সরকারের পক্ষে সহজ হবে। ইভেন যিনি ট্যাক্সটা দিবে তিনি যদি ফার্স্ট দিয়ে দিতে পারে, একটা সার্টেন টাইমের পরে তারও বার্ডেনটা কমে যাবে।
That is okay. If the person concerned can pay the tax now, it lessens his burden or her burden. And also the government realizes the tax. But another issue is there. Why I'm asking you is that you have to know the root cause. The root cause is the time value of money. Today, if you have 1 taka, and if you have 1 taka after 1 year, it's not the same. Because
No,
the
sir.
value of 1 taka after 1 year would be 95 paisa or 90 paisa.
90 পয়সা জি স্যার এটা তো ইন্টারেস্ট রেটের উপর ডিপেন্ড করে যে এনপিভিটা নেট প্রেজেন্ট ভ্যালু
What is that? It is the time value of money.
জি
So
স্যার
that's why if the government can realize the money now, it is better for the government. Government can invest it in other sectors, productive sectors, and government can get more money from that. So that is the root cause. You have to know it as a chartered accountant. When you become a chartered accountant, you must know it. Okay, but other things, what you have said, that those are also correct, because the government has to realize without any hassle. Government has to realize now, and the SSCs, if they can pay it now, then their burden is less. Okay, good. Then let us go to the session. We are going to discuss some issues relating to terminologies. Terminology means definitions. If you go to section 2 of the Income Tax Ordinance 1984, you will find different definitions, and the definitions are arranged in alphabetical order, meaning that if you go to definition chapter, you will find a definition starting with alphabet A. Then you will have one definition starting with alphabet B, something like that. Up to Z, you have to go there. And the definitions are to be known to you, because definitions are very important in the book, that is the Income Tax Ordinance. Wherever you read or whichever you read, you will find some definitions. That's why it is necessary for you to understand terminologies. And sometimes some definitions are very common and people understand it in one way, but people are not aware of it from the viewpoint of the Income Tax Ordinance. Since you are a student of commerce or you are studying chartered accountancy, so that's why you have to know the internal meaning of this. For example, you will say SSC, but general people will not say SSC. General people will say taxpayer. Correct? So general people do not know what an SSC is. You have to know an SSC. There is a definition, resident. You know what a resident is. Some people will say that, okay, when I reside in this country, I am a resident of this country. But from the viewpoint of income tax, it is not like that. It is different. If I stay here, it's not sufficient enough to become a resident. Rather, you have to know about the definition, what is actually meant by resident. He has to stay here for a certain number of days in a year. In that case, he would be resident, and it is for individuals, but for other classes of persons, they have to fulfill other conditions, like the company. If the registered office of the company is here, then it is, the maintenance of the affairs of the company is in Bangladesh or situated in Bangladesh, then it is a resident company here. Like that. So let us start with the definition. First definition, you will find, as I have told you before, that the definitions are started with alphabetical orders, in alphabetical orders. So you will find the definition first, maybe annual value. I'm not going to discuss all the definitions here, rather I will be touching upon some of the important definitions which are needed for you. So annual value, if you find it in the Income Tax Ordinance, there is a definition given here, what an annual value is called. So why is it necessary to understand? Because this is related to section 24. Section 24 means the income from house property, residential house property or commercial house property. Whenever you let it out to others, you are getting some revenues. Revenues means you are getting the rental value of the property. So that is the rent. That's why you have to understand annual value. So in income tax, rental value or the rent you are realizing, that is not taken into consideration. But the income tax authority will call it annual value of a property. Annual value has to be calculated first. Then from the annual value, you have to deduct expenses relating to that. So annual value is to be known to you. How would you determine the annual value of the property? So definition is given here like this: the value for which the property might reasonably be expected to let from year to year. That means if you let the property in a particular year, reasonably expectation should be there. That means the Deputy Commissioner of Taxes would have the reasonable expectation that this property has to be let out at a certain value, which is expected value. So if you say I have let this property out at taka 50,000, but the real value, letting value of the property is 80,000, then the Deputy Commissioner of Taxes will not accept it. So he will go for 80,000 taka per month of the property, like that. So here you have to understand that it should be reasonably expected value, and it can vary from 1 year to another year. It is not static for every year, but it can vary. So it depends on a number of factors actually, where the property is located. If you have a property in Dhanmondi area, and if you have a property in Mirpur area, definitely the annual value of the property should be different. Because in Mirpur, the value of land is not that high as it is in Dhanmondi area. And the letting out value is also less in Mirpur compared to in Dhanmondi. It's because of the level of income of the people who are residing there. And it is also because of the facilities available there. And it is also because of the forwardness of the area where the property is located. And also because of the cost of the property. That means when you buy an apartment in Dhanmondi, you have to spend a certain amount of money, which should be, I should say, substantive. But in Mirpur area, your value of that property will not be that substantial. So that's why there is a difference. So these are the factors, as I have indicated to you, while considering the annual value of the property. So when you are saying that I have got taka 50,000 per month as rent for my flat in Dhanmondi, then the annual value of the property comes to taka 6 lakhs. 50,000 times 12, it means 6 lakhs. So if it is acceptable to the Deputy Commissioner of Taxes, then he will accept it. That means he will calculate the annual value at this price, and then he will deduct other expenses in order to arrive at the income from the house property. But if in his opinion it is not acceptable, then he will go for increasing the annual value of the property. Since you have shown it at 6 lakhs taka, he will just fix it at 7 lakh taka or 8 lakh taka, whatever it is, according to the value to be determined considering the factors I have indicated to you. Maybe the Inspector of Taxes would visit the place, and he will send a report to the Deputy Commissioner of Taxes for determining the annual value of the property. So what he will do, he will come to the area and he will find out another apartment similar 2 years, and he will look into that, at what value it has been let out. So if it has been let out at taka 50,000, then it is okay for you. If it has been let out at taka 70,000 or 80,000, then he will report the value to the Deputy Commissioner of Taxes that the similar property in that area has been let out at taka 80,000 per month. That means the annual value of the property comes to taka 9,60,000. So in that case, the income from the house property would be calculated by the Deputy Commissioner of Taxes. But if it is found that the rental value, what you have shown, is more than the expected value, more than the annual value, what has been expected by the Deputy Commissioner of Taxes, in that case, your shown value will be the annual value of the property, and that will be accepted by the Deputy Commissioner of Taxes. So two things are necessary to understand here. If your shown value is equal to the expected value, it will be accepted as the annual value. And if your shown value is more than the expected value, then your value will also be accepted by the Deputy Commissioner of Taxes. But if your rental value is less than the expected value, then it will be increased or enhanced by the Deputy Commissioner of Taxes. So that's the case here. And it's very necessary to understand, because general people will not be able to know why his annual value has been increased, or why the income from the house property has been calculated at a higher price. So you have to let them know that this is the reason why your annual value has been increased, and why your income from the house property has also been enhanced. Other issue is that whenever you are letting out the property in an unfurnished way, the value will be different. And when you are letting it out in a furnished way, the value would also be different. For example, if you let out the furniture, fixtures, etc., along with your space of the apartment, then the value would be different. It will be more. But if an apartment is only let out and there is no furnishings or furniture, fixtures, etc., so that's that value will be a little bit less, of course. So you should also know about it. Okay.
Yes, sir.
Any question up to now? If not, then we will go to the next definition, appellate joint commissioner. So there is a terminology which is called appellate joint commissioner. What is an appellate joint commissioner? Who is an appellate joint commissioner? So he is an authority of the income tax department, looking after the appeals preferred by the assessees, meaning that whenever an assessment has been made by the Deputy Commissioner of Taxes, and if the assessee or the taxpayer is not satisfied with the assessment, then what shall he do? So the client will come to you for suggestion, for consultation. So what would you suggest? When the client comes to you and says that the assessment made by the Deputy Commissioner of Taxes is not up to my expectation, or it's a very high assessment he has made, and then what suggestions will you provide to him? So I am your client. I am asking you that the assessment made by the Deputy Commissioner of Taxes is not satisfactory to me. I am not satisfied with the assessment. He has made a very high assessment for me, which I cannot pay to the government. That means the tax which has been imposed on me, it is not possible for me to pay it off. So what shall I do? What is your suggestion?
স্যার আমি আপিল করব।
So to whom? To whom you would prefer an appeal?
আমি ইয়েতে আপিল করার ওইটা আসলে পড়ি না এখনো, কিন্তু আমি বেসিক আমার যে সেন্সটুকু যে আমি আপিল করবো, এখন আমি প্রমাণ করবো যে আমার এই ভাড়াটা এত না, আপনি আমাদের কমিশনার যত বলতেছে এত না, এবং এটা এগেইনস্ট আমার যে আশেপাশে যে বাসা ভাড়া বা অন্য যেগুলা ওগুলো এভিডেন্স দাঁড় করাবো যে না আমার এটা এত না, আমার বাসা ভাড়া আমি যেটা দিচ্ছি এটা অ্যাকচুয়াল, এবং সেই অনুযায়ী আমি আমার ট্যাক্সটা দিব। এখন
Okay.
কমিশনার আমার চাপ দিয়ে দিলে তো আমি ট্যাক্স দিতে পারবো না, সেটা আমার খুব বার্ডেন হয়ে যাবে।
Now that is good. That is the reason. Okay. But my question is, yes, you will prefer an appeal, but to whom? You have to know the person to whom you will prefer an appeal. You cannot prefer an appeal to the Deputy Commissioner of Taxes who made your assessment. He is not a person. So that's why the definition is here, the appellate joint commissioner. Appellate joint commissioner is the person to whom you can prefer an appeal, because he is above the person Deputy Commissioner of Taxes. So he is responsible for hearing the appeals of the assessees. So when you are aggrieved with the decision given by the Deputy Commissioner of Taxes, then the appeal could be preferred to the Appellate Joint Commissioner of Taxes.
স্যার অ্যাপিলেট জয়েন্ট কমিশনার কাছে আপিল করতে হবে, তাই তো?
Yes.
স্যার এরপরে যদি আমি স্যাটিসফাইড না হই, তাহলে কি আমার কোর্ট পর্যন্ত যেতে হতে পারে?
Yes, of course. Then there are other authorities. I'll go to those authorities again. So if you are not satisfied with the Appellate Joint Commissioner of Taxes, then I will go to the Appellate Tribunal. So there is also a definition on Appellate Tribunal. Okay. So let us see what the Appellate Joint Commissioner can do for me. So he will call for the documents from me, and if he is satisfied that whatever arguments I have given to him against the Deputy Commissioner of Taxes, those are acceptable to him. If he accepts those arguments, then he will give me a verdict in my favor. So what the Deputy Commissioner of Taxes will do? He will revise his assessment order according to the directives given by the Appellate Joint Commissioner of Taxes. But here one point. He will revise the assessment order, there is no doubt about it, but he has got an option. The option is that he is always responsible for maintaining the revenue or protecting the revenue of the government. So that's why he can also prefer an appeal against the decision given by the Appellate Joint Commissioner of Taxes. So he is protecting the revenue of the government. So that's why he would prefer an appeal against him before the Appellate Tribunal, that the revenue of the government has been decreased. It has not been maintained. So government has lost revenue. So his argument will be like that. His argument will be like that I did the assessment according to my best judgment, and whatever I did was in accordance with the income tax ordinance and proper law. So that's why the Appellate Joint Commissioner cannot reduce or revise my assessment order. So he can also prefer an appeal. But if he thinks that he will not win the case, if he prefers to the Appellate Tribunal, then he will not go for that. You understand what I mean?
Yes, sir.
Okay. So the definition says that the Appellate Joint Commissioner of Taxes is a person appointed to be an Appellate Joint Commissioner of Taxes under Section 3 of the Income Tax Ordinance 1984. So he is a person who has been appointed as an Appellate Joint Commissioner of Taxes under Section 3 of the Income Tax Ordinance 1984. But I have discussed the functions of the Appellate Joint Commissioner of Taxes for your understanding. Okay, now let me come to your question. Your question was that if I am not satisfied with the order of the appellate joint commissioner of taxes, then what shall I do? Then you have to go to the appellate tribunal, taxes appellate tribunal or appellate tribunal, whatever you call it. So appellate tribunal is a forum. There are a number of members, and one president is of course there. So it's a forum of maybe 2 people, 3 people, 4 people. So the president of the appellate tribunal is generally from the National Board of Revenue, who is a member, or he may be from other sectors, like he might be a judge, he might be a retired judge, he might be a chartered accountant, maybe an FCA, something like that. So apart from the president, there are other members, maybe 1 member, 2 members, etc. So they will hear the appeals preferred by the SSC. The SSC will produce documents, books of accounts, etc. in support of his argument. And he will definitely say that the appellate joint commissioner of taxes was not fair in making the in making the decision, in making the verdict or giving the verdict. So if the tribunal is convinced that your case is a genuine one and the arguments that you have produced before the appellate tribunal are correct and fair and complete, then they will give you a decision in your favor. That means they will reject the verdict given by the appellate joint commissioner of taxes, and they will give a new decision, and that decision will be sent to the deputy commissioner of taxes direct. The deputy commissioner of taxes will revise the assessment order following the directives given by the appellate tribunal. So maybe your grievances will be redressed and you might be satisfied with the decision given by the appellate tribunal. But sometimes the appellate tribunal may not give a decision in your favor. They can also give a decision against you. So in that case, what shall you do? So your client is asking you that I am not satisfied with the decision given by the appellate tribunal. Then what should I do? You have to give him a suggestion. Actually, the appellate tribunal is the highest authority, and you cannot go beyond the appellate tribunal. But you have to consider the issue. If the issue is related to law, that is legal point, legal matter, then you can go to the High Court division. But if the issue is not related to legal matters, if there is no law point there, in that case, you cannot go to the High Court division of the Supreme Court. So in that case, the appellate tribunal is the last forum you can go to or you can approach. That's the last forum. You have to accept it. And you have to pay taxes according to the decisions or verdict given by the appellate tribunal. So that should be the suggestion you have to give to your client. So if I give you an example, say for example, you are a businessman and your sale was estimated at taka 10 crores because you could not produce the books of accounts, vouchers, receipts, etc. properly, or you could not maintain your sales day book, journal, stock book or inventory book, etc. So bank account you could not produce properly. So that's why the Deputy Commissioner of Taxes did not accept the books of accounts produced by you. So he has estimated the sales figure at taka 10 crores, but you showed it at taka 4 crores or 5 crores. So in that case, this is a factual matter. That means it's a fact. So if the appellate tribunal determines the sales figure at taka 6 crore in place of 5 crore, what you showed, then you have to accept it. You cannot change it. But if there is an issue that you had a capital expenditure and the Deputy Commissioner of Taxes treated it as a revenue expenditure, or you had a capital receipt, the Deputy Commissioner of Taxes treated it as a as a revenue receipt, but it was actually a capital receipt. So in such circumstances, these are legal issues. So you can go to the High Court for redressing this kind of issues. The High Court can give you a proper decision that this is a capital receipt or this is a revenue receipt. If it is a capital receipt, there would not be any tax on it. And if it is a revenue receipt, then tax would be imposed on it. So it is up to the High Court, which can give you a legal decision. So is it okay for you up to now?
Yes, sir.
Okay, so you can now advise your client what is to be done and what should be the proper decision to be taken by him or her. Then let us go to another definition, which is here, approved gratuity fund. Gratuity fund, you have heard of it. That means whenever somebody goes into retirement, you will be given some amount of money at a time. That is the gratuity fund. And the fund has to be created by the government or by the institute or by the organization or company. And the fund has to be approved by the National Board of Revenue. So there are some provisions under which you have to form the fund. And if the fund is approved by the National Board of Revenue, we will call it an approved gratuity fund. And whenever there is an approved gratuity fund, in that case, the money which will be given to an employee at the time of his retirement will be free from tax or will be free from tax up to a certain amount. So what is the gratuity fund or what amount of gratuity will be given to an employee? Do you have an idea about that? In different institutes, there are different rules maybe because a private company will be forming a fund with some conditions. In the government, it will be a little bit different. There's one policy is adopted by the government for every department. So how to determine it, how to calculate it? Have you got an idea about it? Tell me. With the government, you will see that the person concerned goes into retirement at the age of 59. So when he goes into retirement, at that time he draws a salary, and there is a basic salary, of course. And if the basic salary is taka, say for example 82,000, which is the highest basic salary in the government for the senior secretary, and that basic salary is taken into account in order to determine the pension money and the gratuity money. So 90% of this basic salary is calculated first. So if the basic salary is 82,000, 82,000, 90% of it comes to 73,800. That has to be calculated first. Then you have to divide it by 2. That is, it is to be divided into 2 parts. So one amount is 36,900 and another amount would be 36,900. So 36,900 would be the monthly pension money given to the retired employee, 36,900. That should be paid to the retired employee as pension money. And another 36,900 has to be multiplied by 230. And that is 84,87,000. 84,87,000, that should be the figure of the gratuity. The person concerned would get this amount at a time. Okay, and then he can invest it in any field, whatever he likes. He can invest in government instruments, he can invest in FDR, he can invest in a savings bank account, he can invest in any other sector, whatever he likes to. So if you invest in your pension Sanchoy Patra, pension savings certificate, you can invest up to 50 lakhs of taka. If you give a certain amount of money to your wife or to your daughter, you can maximum give him 45 lakhs for investment in family Sanchoy Patra or family savings certificate. And if you want to buy pension savings certificate, it should be 50 lakhs. So whenever you are receiving the interest from the pension Sanchoy Patra, that is not free from tax. But the pension money you are getting every month, that is free from tax. But if you buy pension Sanchoy Patra for an amount of taka 5 lakhs only, and the interest that would be accrued on that 5 lakhs taka would be free from tax. Okay. And you have got other Sanchoy Patras, maybe 3 monthly profit basis Sanchoy Patra or other saving certificates, or FDR, you can put it in 5-year Sanchoy Patra. So that is also possible. So it is up to you what you will decide. Now, let us go to approved superannuation fund. Approved superannuation fund means a pension fund, and it is a fund which is created by the company or by the government or by the institution, and it has to be approved by the board. Board means the National Board of Revenue, in accordance with the provisions of Part A of the first schedule. If you go to first schedule of the Part A, at the end of the book, that is the Income Tax Ordinance 1984, you will find the provisions. That means how to maintain them or how to proceed with the formation of this fund and how to get it approved by the National Board of Revenue. So whenever I say board, it means National Board of Revenue. It is no other board. Okay, then let us go to another definition, SSC, which is very important. And in the beginning, I said that SSC is a term which is not common to the general people, because general people are accustomed to using, taxpayer. But you who are practicing chartered accountants or who are well conversant with income tax, you know that the SSC is a taxpayer, and there is a definition for an SSC. Who is an SSC? Everybody is not an SSC, but there are some criteria, and if you can fulfill one of the criteria, you will be treated as an SSC. So if you have an income which is liable to pay tax, or if you cross the limit of the first slab, that means if you cross the general exemption limit, we call it general exemption limit. There is a general exemption limit. Say, for example, in the previous year, the general exemption limit was 3 lakhs taka. That means up to taka 3 lakhs, you don't have to pay taxes on it. Or you can say the percentage of tax on it would be 0. So that's why that is the general exemption limit. Sometimes people will say, what is the general exemption limit in your country? So you have to tell them that this is 3 lakhs taka for individuals, not for others, but individuals. Because there are other persons. You see, person is a concept also in income tax. We will be studying or discussing the concept of a person. Who is a person? Person does not mean an individual only. Rather, person includes other entities, like individual is a person, farm is a person, company is a person, Hindu undivided family is a person, association of persons is also a person, municipality is a person, corporation is a person, fund is a person, artificial juridical entity is also a person. So these are actually persons. So whenever somebody says person, it means that it could be any entity as per income tax ordinance. Individual.
স্যার আসরের নামাজের জন্য ব্রেক দিলে ভালো হয় স্যার আসরের নামাজের জন্য
Break for how many minutes?
15
15. Okay, you come back after 15 minutes then. Okay.
Okay, sir.